Hello, folks. Welcome to State of the Market. I am David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. So, as usual, we start off just on these disclosures. I'm going to share a few other quick things in the chat. Now, remember, in this webinar on Mondays, we look at the big sectors and indexes. And then on Thursday, in market trends, we look at individual stocks and like things that are more kind of news oriented and things that are happening and interesting at individual company levels, individual kind of trends and groups. This webinar, we really focus on the big spider funds, and that's really what we focus on Mondays. So we're going to first start off by showing the standardized returns of these big spider funds you can see here. Wait a second, that's wrong. This one. All right. And interesting that, right now, I think that the big takeaway from my webinar today is going to be that technology is showing more signs of resilience and breadth going into the NVIDIA earnings report on the 26th. And it's really interesting to see the internals of the Qs getting better that we're going to show you in a second. Although there is some risk in the XLY, the consumer discretionary, after the kind of so-so report from Amazon and the weakness in Tesla. But what is interesting is to see the continued strength in communications, and we're going to start to see, some potential of some attempts to have some strength in industrials and energy. Nonetheless, to me, I think the thing that stands out that is in some ways not, there's a few things, but I think the thing in some ways that's most interesting is we're in an environment now of kind of a spreading weak dollar, and I think that's going to be something actually we've seen it in things like gold miners. We've seen it in things like foreign stocks. And I would not be surprised if maybe not surprised, we just say overall that one of the things that is standing out to me now is what's happening with Chinese stocks. We've talked about this before, and I think the thing is right now where there's been so much negativity toward Chinese stocks and they trade at such a lower valuation. And I think at this point, when we look at what's happening with Trump and everything else, I'm going to get to that in a second. But I think a lot of people are at a spot where they realize that the negativity has gotten beyond where it should be potentially. But the first thing I want to start with is the money in money market funds, because it is so high. And this to me is really what we need to realize here is that there is vast dry powder. There is a ton of negativity. Last week, the American Association of Individual Investors had its highest bearish rating since November 2023 when the current bullish run started. So go to tradestation.com, click on Insights at the top. This will take you to our Monday story today, which has this kind of downward chart on it. But also open this other article as well. Tech, smaller names break out as the big three lag. That's an article I want to just mention a little bit. Now let's look at this one, because this one where we actually cover some key things with the S&P 500. So this has a chart that I think is very interesting, because we have this falling trend line in the S&P we've gotten above, and now I'm going to show you another chart, but there's another falling trend line. So what do we have here? We have a support down here from the election day. We have this other support. So this was when DeepSeek terrorized everyone, and then this is when you can see it better. This was when everyone freaked out about tariffs. And both times we held 59.63, which was actually a level that went back across here. This is actually was a weekly close after Christmas. And it basically went across right around 59.63. And then what's interesting is this other level, which was actually near these highs right here. This is a weekly high here, and I think this was a weekly high here. So the thing is this other area that we held. And that's interesting. And now we're bouncing today. So what do we see? We see support, higher support, and now potentially higher support sneaking toward the all-time highs. So I just think this is something that's interesting. Also, RSI is neutral, which basically means it's not overbought, it's not oversold. Can it just kind of keep going? And I think that's, well, not, I don't say keep going because RSI is neutral, but what it means is it's in a spot of neutrality, which means that if it does start to move to the upside, this could trigger a chase. And I think we have to realize that this kind of environment where there's a lot of negativity priced in, and then things don't blow up and the world doesn't end, is the kind of environment that can result in you know, something of a run that could actually last a while. We have been consolidating for a long time, so I want to just point this out. So now we're going to go to our weekly charts, our normal charts we use on TradingView. And what's interesting here is, like I said, we've really been going nowhere here since December. But what's interesting is we have this downward trend line. You can see it on this chart, on this weekly chart that we've held, and now we have an inside week. But what's really interesting to me, this level here is this was actually the close right after Christmas that we talked about. You can see also these weekly highs right here from the early week in January, and then that next week in January right here. This was also that shows up as, this is the equivalent of these. See, this is the, see right here, you can see at the day, this is like a weekly high. And then this is, I'm sorry, this is the weekly high here. And then this was a Friday. So these are weekly highs right here. So you can see all the way back then, actually on this chart, I want to add also that you go all the way back to November 29th. It was the weekly close. So it was then support before the Fed came and punished the market with its dot plot going from 4 to 2 cuts. That was back on December 18th. That was a level at 60.32, and then that more or less became repeatedly an important level. And so we came back last week and we basically just came down and tickled it and then came right back up, kind of held it. But I mean, we went under it a little bit, not significantly. And the thing, when you look at it, this entire zone across here between around kind of 60.15 and about 60.32 has now emerged as a new support zone. You can see it was support, then it was resistance, then it became support again. So to me, it's interesting. Also, if you look back on the daily patterns here, we only closed below 60.32 a few times. We gapped under it on DeepSeek and we closed over it the next day. Then we gapped down on tariffs and we closed back above it the next day. And here we were on Friday when everyone's scared about the fact that Trump's going to announce more tariffs the following week, which is right now. And now it doesn't hold. So I think this just kind of shows us a few things. And I think really the real thing here is that there is a lot of nervous Nellies. There's a huge amount of fear in this market. A lot of cash on the sidelines, and that's, I think, what this chart is telling us, and this kind of price action is telling us. So I think people are also starting to realize, that the tariff stuff, it comes down to what is his intention. Is Trump trying to destroy the global economy, or actually is something else happening? Let's look at the upcoming events. Jerome Powell's in Congress tomorrow. CPI is on Wednesday. NVIDIA earnings are on the 26th. Then you flip to March. March 4th is the State of the Union. So right now, it's possible that the president is basically chalking up easy wins going into the State of the Union that he can brag about. And I think that's maybe more the way to think about it. Does Trump want to destroy the economy 3 weeks before the State of the Union? Or does he want to have a bunch of talking points? And maybe that's more where we are. He did his thing with Colombia, went away real quick. Mexico, Canada, went away real quick. Now he's going to do the same thing to Europe. Again, does it go away? And ultimately, when you look at it, Europe is not as big of a trading partner as Mexico and Canada. So I think ultimately at this point, this is a very contrived sort of thing that is happening right here. It is very engineered. And whatever you think about Trump, whatever you think about tariffs or anything else, this is something that is being managed. And the intention is not to cause huge disruption. And if we know that's the intention, and the market is now starting to realize that essentially we're in a spot where all the stuff that's supposed to be terrible and frightening is actually not ending up that way. So people have been selling the rumor and now they're buying the news. And I think that's kind of what we're seeing here with the money on the sidelines, the bearish AAII. And, also consumer sentiment was bearish again last week. Everyone's convinced inflation is going to come roaring back. So all these are things now where there's a great deal of negativity we can see. And that also is kind of consistent with it. There doesn't seem to be a lot of leverage in the market. There's not a lot of complacency in the market. So to me, all these things kind of come together and suggest that we're in a spot where people are very fearful and there's cash on the sideline. It's also interesting that if you look at forward guidance coming from earnings season, companies are guiding down Q1. But what does that tell us? It tells us that they basically don't want to be sticking their neck out. It doesn't mean the results are not going to be there. So we could also be setting up for a wall of worry into April when those earnings start coming out. So I think right now we're in a spot where these guys are, slashing earnings, and then at a certain point in time, we can start to see them trickling higher and upgrades start coming. So I think right now we're in an environment where we just have to realize there's a lot of negativity. There's a lot of cash on the sidelines, and a lot of things are not blowing up that should be blowing up I say should in quotes, meaning if you believe what the overall narrative in the market is or the narrative from reading the news. Um, Also, if your management and you're issuing weak guidance, but there's a reason, do you really want to be in a spot where you're saying a bunch of negatives, being overly optimistic? And I think that's really the issue here. Is I think a lot of people, management teams, don't want to be overly optimistic. It's better to set a low bar that they can then exceed later. All right, so I told you the S&P 500. The daily chart is more of our focus today, but I mean, there's all these levels that when you're in this kind of range where the weekly doesn't even the weekly is just kind of confused here. I think you see this falling trend line, and here we actually see this new falling trend line. So now this is setting us up for a potential for people might view this as something that has a breakout potential, that continuation. Remember, this was the all-time high back here. It was less than a month ago. So, this is not something that is really showing that it wants to break to the downside. I also just mentioned, if you look at the range of last week from the low on Monday through basically the high on Friday, we actually held 50% of it as well. It's just a little factoid that might also kind of suggest here that there is a little bit more of a bias toward the upside. All right, now last week's move was actually very small. It was the smallest in a while. If you actually read this article, I think we said that it fell 0.2%, which was the smallest weekly move since the beginning of October. Again, small, tight moves is not consistent with a bearish market. Low volatility tends to also reflect overall positivity. All right, now the key thing, though, to remember is that we have CPI on Wednesday, and that will probably be the big event this week. So we do actually outline it in the article here. We talk about this on Wednesday. Jerome Powell is going to be speaking on Tuesday and Wednesday, but it's a tricky thing because normally sometimes they put out the testimony early on the Senate Banking Committee website, or you never know exactly how it's going to pan out. But just realize Jerome Powell will be speaking the next 2 mornings as well. All right, so that's the S&P. Now the Qs are actually getting kind of interesting here. In fact, I want to first go over to our MT breadth. This is a workspace we use in our market trends webinar. But I want to just point out over here in the Qs that the breadth is actually, look at the advanced decline line in the NASDAQ. We're actually starting to see some real interesting sort of strength inside of the NASDAQ here. So we did this article that I want to just very quickly mention about tech, smaller names break out as a big three lag. Just check this article out. We did it on the 4th. It's on the blog. Things like Palantir, but there's others, and Keysight, which we did today for TradingView. These other kind of companies, we wrote about Cognizant, and the next day it kind of started jumping. So we'll just point out that what we're starting to see, it appears to me, is a broadening inside of tech, and it's going away from just the largest names into all these other kind of smaller names like Fortinet or Cognizant Technology and CrowdStrike. And again, that is what we're seeing in the MT breadth workspace on the Qs. So people might talk about bad breadth in the S&P 500 and things like that. But when I really look now at the NASDAQ, I look inside of technology, I'm actually starting to see an improvement in overall breadth. And maybe the things that are lagging are random healthcare stocks, which we're going to get to healthcare, but that has gone from having a sharp bounce to being kind of back to what it was. So anyway, let's look at the Qs on the weekly chart on TradingView. And what do we see? We basically see that now, I mean, it basically, it has held this trend line, and we now have a tight sideways move here for a while. And so I think it's interesting. We have this level here at 520.96. We're going to close at 521 on the Qs, and essentially it was this kind of it was like near the weekly close back in the middle of January. Then it was a weekly low, then it was weekly close, weekly close. So from my view here, this is something where it has not gone very far. And what do we have coming up? We have Nvidia on the, what did I say, the 26th. So from my perspective now, there was a tactical upgrade of Nvidia from, who did it today? Someone did something on Nvidia today. Evercore. And, so at this point in time, we definitely had a lot of names that got ahead of themselves, these kind of crazy, just AI names that were very focused on data centers and stuff like that. And now it's broadening out to other companies, especially software names and things like that. So I just want to put this in focus here is that basically the Qs are very tight. The XLK looks similar that we're going to get to here. So this is to me something that this kind of sideways movement with the downward trend line, this may have the potential to expand. Of course, this is so important to the S&P 500 that this is also similar to the S&P 500 with the same sort of downward trend line and the same potential of extension if money if more money comes off the sidelines and we don't get something that just overall wrecks everything. So those are the things on the cues. Now, the Dow Jones Industrial Average, on the other hand, has some potential here of a double top and some kind of stalling. These sort of candles here are stuck at that level from November. We had a bounce in the value stocks. We had this idea of the whole value trade. It comes out of the woodwork every quarter or two. The whole idea of value is going to be so great, and it lasts for a few weeks, and it did, but now I think we have to realize is that we've seen this before, and this is something now where people might actually see this as having some resistance here. So I always point out 45,000 on the Dow is actually an area now that might be causing some trouble, and people probably want to see a weekly close above it. The inability to have a weekly closing high, and I mean, that is not a bullish sign. So the fact is that we had a weekly closing high. Our last weekly closing high was November 25th. And now what do we have? We're closing below it. All these closes were below it. So this is something here where people might actually think that the Dow is just going to stall and be dead money. And then, there is the potential here to view this as a double top on the kind of, a short-term double top, but something that could actually struggle for a while. So I want to point that out, especially with NVIDIA earnings coming, and then the AI event in March. And don't forget, in March, we're going to also have not only an AI event, but there's going to be a quantum computing event. So check that out. It's part of the stuff NVIDIA is doing, and that is coming. What did I say? March 17th through the 20th. There's a bunch of things in that time frame. So, that is the Dow. The Russell also is in a spot here where, it has this falling trend line. And what I would say is if we get a really cool CPI report tomorrow and the treasury yields plunge, people might actually look to stampede into this. But I think also we have something here where we do have some clear levels and people might want to really see a close, above this level here to really get very interested. We have a pretty clear resistance level right around here at these 3 weekly highs, and a close above that might be needed to confirm. And I think if we are going into this mode of people focusing on growth stocks, all I can say is that the Russell has been Lucy in the football. It has been, a rug pull many times. And I think people might actually expect more of the same in that environment if we go back to an overall XLK, sort of growth market. 10-year treasury yield here is just pretty much, in my view, a whole bunch of nothing. This is something where, we had mentioned this false breakout, which remains kind of the key feature of this chart, the fact that it does remain more or less trapped. And, right here, this is something that you look at the previous way it performs, it can just kind of drift around, and it might just, the thing to think about for this one might really be not tomorrow's or not Wednesday's CPI, but potentially March CPI, which then would go, I don't actually know the date of the March CPI, but it's not very far before the Fed meeting. So Fed and dot plot in March could be the real catalyst here for the 10-year. And this could simply be something where it just kind of sits and drifts. And the thing is, it could sit and drift and have a little bit of upside pushes. And if that happens, well, then the Russell might actually struggle and people might focus on the large cap growth, or at least the growth stocks, and maybe not the mega caps, but that next tier down. Like we mentioned, those things like Keysight and those things like Cognizant and those things that we have in that article. All right, so that is the 10-year materials, very similar to small cap, just kind of this thing that's stuck where it is. It's been, a problematic sector. People probably want to see a weekly close above this resistance level, maybe above these highs right through here. But I think at this point, this is also something where it is a secular sort of, a cyclical growth area where people are not really that focused right now. And it's been, one of the more laggards in the market. So this is something here where I think people want to see a close above this weekly resistance. Okay. And potentially, if not, then maybe something of a retest back down toward the lows if things don't work out very well on that. So that's materials. Now, communications here remain, as far as weekly charts go, the cleanest in some ways to the upside. Here where you're setting up for, basically this was a new weekly closing high. All these have been new weekly closing highs back here at the end of January. Last week was a new weekly closing high. Now we're on track. This is something here where people might look for this to be a relatively smooth extension in the XLC. It's a pretty smooth breakout. Now, energy has a few things that are actually a little bit more interesting right now. It failed to basically push back much below it. We had said that this could have the potential of pushing back down toward 80, but there are a few things happening. One of them is the fact that there is some sign that Trump might try and do more sanctions on Russia, more sanctions on Iran, and then also, if you look at the news today, it appears that the ceasefire in Gaza is maybe not going to continue much longer. So if we have more violence in the Middle East, that also could be something that is just in the background for energy here. So I think right now with energy, we're in a spot where we didn't get a confirmation to the downside. It held this low for now. And there is potential over time of energy going from being a real laggard to actually breaking out and going on another run. Now, that's something that we have to just, like Mark Douglas says about trading, you have to be open to the now flow of possibilities. And at this point in time, while we have said over time that there are, headwinds for energy, the fact is that technically it's making a higher low on the weekly chart. There are arguments in favor of it. It's also possible that Trump is going to leave. I mean, we could have a geopolitical environment that leaves tariffs on Russia for a while or on Iran for a while. And if that happens, there could be a situation here where people view it as an area to play that. It's been very neutral for a long time. And if you look at energy overall, it's been in a pretty small range for over a year. So this might also have the risk of resolving to the upside. So I think we have to just realize that the situation in energy has been bad, but it's not confirming. And there are arguments the other way. And the chart I think is reflecting that. So I want to just point that out at this point in time. That higher weekly low now is something, and this kind of inverted hammer candlestick. These are patterns that could suggest that a move back closer to 100 could actually be in the cards for XLE potentially based on this. OPEC already increased its production as well, and if you look at the commitment of traders report, we are actually seeing a little bit more bullish, and there's some speculators coming in, but institutional investors are relatively not bullish. But that might actually create some potential for the fact that maybe there is not that much ownership or interest in energy. I don't get into them very much, but I will just mention that I've been looking at some of these refinery stocks like Valero here, sorry, VLO. And I'll just say, I mean, it's kind of interesting to look at some of these. I mean, these are just names that have been in downtrends for a long time. And, people might start to look for these into the spring driving season to potentially have some kind of turns. Now, what I've noticed about this market is now a lot of the things that are kind of working are things that are kind of coming off lows and stuff like that. It has happened some. So I think we just need to realize here is that going into the spring and everything else, some of these things like refineries and things like that, also, with the push for electric vehicles fading in the United States, some of the things like refineries and stuff could be areas where people start to look. So I want to just put this on people's radar because some of these are names that really have gone nowhere for a long time. And I think if you look at this, there could be a certain. And let's look at this with a little Fibonacci on this, because if we look at this, I mean, look at that, held a 50% retracement. I hadn't even looked at that in Valero, VLO. So things like the refineries and stuff in this sort of environment, people might start to say, you know what, it's not as terrible as we thought. There's a big bullish outside week last week. Look at that big bullish outside week in VLO with this inverted hammer. Um, anyway, I want to just mention that because we've said things about energy for a long time, and they were mostly panning out, but now things might be turning the other way. Now, financials, on the other hand, have really had an interesting run here, and there's a lot of overall strength in them. It's interesting to look at some of the property and casualty names, which are kind of like forgotten, but they've been some kind of bread and butter names. Things like Travelers and I was looking at names like AJ Gallagher. I mean, these are just, I mean, they're not names people trade a lot, but I've noticed that they tend to give some. I mean, these have been some of the names that have kept financials moving to the upside. Things like Marsha McClellan. These are names that are part of the financial space, and they have been actually showing some strength recently. So I want to just kind of point that out here that financials continue to have strong internals. However, we are kind of at a spot here where it is trying to move sideways, and people might see a little bit of a test back down toward kind of 50, 75 ish, if things are not great. But I think you people have to realize we had a new record weekly closing high here. This might see on the XLF overall, this could be something where people look for, here we are a second day down, and trying to hold above these highs from November. But at this point in time, like, this might be something where not much more weakness, and then people start to be interested in this. So I want to just kind of point this out. There might be some test on the weekly level back down kind of to these lows, back into this space under 51, but there very well could be some interest below those levels because the fundamentals have been strong. And if you look at this on the weekly, it really is setting up for a potential kind of continuation here on the weekly. That is XLF. Now XLK, I mentioned the thing about Evercore. Wait, XLI, I'm sorry, XLI. Now, this is the name that held a 50% retracement, and also the Institute for Supply Management's manufacturing index last week was pretty strong. So this might actually be something here where things are now, also, with maybe the tariff news, people now think, all right, it's basically, we know what's going to be happening and things like that. I mean, there is always a risk of companies. There's a lot of components used for industrial things that are sourced from abroad. But if people have a sense that now that the China thing is more or less, you know, in the rear view mirror, and even if there are tariffs, we actually know how high they're going to be. This is something that's, I think, potentially quite interesting. The 50% retracement of this move, and I actually should draw this there, because that's the Friday to the high. But still, it held a 50% retracement, it made a higher weekly low. So industrials and energy here, there was a sort of negativity, but now they're basically making this higher low in the context of what is potentially kind of a bullish flag here. So I want to kind of point this out because there's a pretty tight range, but people might actually be looking for industrials to resolve to the upside. All right, tech, XLK. And what's interesting is we have this big bullish outside week right here. This was a bullish outside week last week. And it's also interesting that we didn't get back down. I'm going to remove this level because we didn't even go down to it. And now we have, I'm actually move my support down there. And now we basically have a range that's not very big between 225 and 241 with the NVIDIA earnings coming and other things like that. So what's also interesting is look at Super Micro today. This is some of these smaller tech names have been really kind of coming back to life. I've been looking at things like HPQ as well. Some of these are names that also just kind of left for dead. This they also do stuff with AI. And so from my perspective here, there's things like this that have been starting to appear on some of these charts. And often in a bull market, what happens is you basically see a lot of value hunting and things that have been lagging get some degree of strength. And so I think right here, not trying to say anything about HPQ per se, but what is interesting is that this is why we're seeing the advanced decline line of the Qs improving inside of the XLK. We're seeing more companies perform. So I want to just point this out that the breadth inside of the XLK is improving as it moves sideways. And we had said some time ago that the chart that had the most kind of clear promise was communications. I think it was back around here because it had this tight pattern as it kind of escaped. Can't remember where we said that. It kind of as it was coming through here. But I mean, there is some similarity to a certain extent where if you actually think of where XLK is now, because it's squeezing against old highs and it just is not seeing the selling pressure that it did before. So I think that's kind of interesting. Um, Look at this article about things like cognizant technology, CTSH, things like Keysight that we did today for TradingView. These are all names that are kind of out there as the AI thesis spreads. I mean, Cognizant does AI, they do software development, and if people suddenly need to do a bunch of AI projects, they are suddenly emerging as a name people can go to. Things like Keysight, they optimize networks, and as people need to work on networks, well, they need to buy more of their testing equipment and stuff like that. So these things are emerging. They're talking about AI in some of their news and stuff, and it's kind of spreading. So I want to just kind of point that out. That is XLK. XLP stuck to me here, this level at 79, right around 80, right below 80, kind of stuck here. And we do, if we want to be bullish on stocks, we want to see XLP do badly. Or at least lag. Generally, in a bull market, consumer staples will not do well when the rest of the market is bullish. So I want to just kind of point that out. This is an interesting indicator. If it remains stuck here, this could actually be what we need to see the broader market take off, because there has been some outperformance recently in XLP, which is one of the one of the red flags, a potential red flag I have on my list, but it has been just kind of, it hasn't really been as strong as it really gets to make me nervous. But overall, I want to just point that out that XLP is something that generally a safe haven that will lag in a context of a bullish market. XLRE is interesting. REITs here, I think, might also be something people look to if interest rates do moderate here. There was a lot of bullish news recently in real estate names. CBRE, which is a big manager of offices, has done very well office space. There's been a lot of bullish notes coming out. S&P Global was saying bullish stuff about real estate investment trust. Blackstone, which is a huge real estate company, there's a woman there named Kathleen McCarthy on CNBC last week who said some interesting stuff. CNBC also an article about office demand in New York City is kind of coming back to normal. I think also we have to realize in real estate that back in 2016, 17, we had the retail apocalypse and all the retail shopping centers shut down. Then we had basically COVID come along and shut down the office space. So we had like apocalypse after apocalypse, first in retail, then in office. And then we had higher interest rates in 22, which basically all these things were like a triple death knell, hammering REITs. And now all those things may be lifting here. So I want to just point out here that REITs, these have a lot of bullish outside weeks. If you look here, look at this is a bullish outside week, bullish outside week, bullish outside week. So REITs here, I think XLRE are in an area where people might start to see these as a longer term sort of value, and there are signs of this improving. This is going to hinge though on CPI, so just be aware of that. Now XLU is another area also that has had some favor recently. It's trying to kind of base out. It also has an AI thesis involved in it. It's in this tight range, and I'm just kind of trying to watch this and wondering if this does not actually where people are seeing it hold these old highs, and this is an area that has been strong. So people might be actually starting to see some potential promise in utilities. XL V healthcare, on the other hand, stuck like consumer staples. This level here might turn into some resistance. I think we want to just realize this one here may be facing resistance. And then consumer discretionary here. Tesla kind of is struggling. And with this trend line, sometimes things like this, they do actually leak lower. So right now with things coming back to tech, XLY is not a huge part of the cues. And, it is Tesla and Amazon. Amazon's numbers are kind of so-so. So people might actually be looking for this to bleed a little bit lower back toward kind of 220. So I want to just point that out. 220, 218 was a mega level we talked about a while back. This level here, where was it? It was these highs. So just realize, is this something here where the momentum has kind of hit the wall? Tesla has had not so great news. It's had a big move. Amazon also had this kind of so-so, report. So right now, I want to just kind of mention that people might be seeing a little bit more risk of this one kind of chopping around and testing some support. Okay, so we will do market trends on Thursday at 2 p.m. Eastern. Hope to see you guys then. Just remember, Powell is in the Senate on Tuesday and Wednesday, starting at 10 a.m. both days. And then Wednesday morning at 8:30 Eastern, we have CPI. I'll see you guys on Thursday at 2 p.m. Eastern. Check out there will be a link to it, but if you go to tradestation.com, go to the learn section, the events list, there's a link there to our webinar as well, and it will also be live streamed on YouTube and Facebook. Have a great day, and I'll see you on Thursday.